please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A little bit of pickup actually on the SGX Nifty now. It's almost 6-7 points higher. It's a little better off than where we were about 15 minutes back. All right, let's quickly move on to get you another story from the debt resolution space. This one is an exclusive. We're learning that lenders of Essar Steel are planning to meet today. Sources say that creditors may once again invite bids from all players who had submitted expression of interest for the debt-laden company. Ritu Singh is joining in with some details. Ritu, what are you picking up?
That's right. The Committee of Creditors meeting for Essar Steel will be held today, and it is a very important meeting where eligibility of both Arcelor Mittal and Numetal to submit bids for Essar Steel will be considered. But the consensus we understand from our sources that has emerged among the banking community in their conversations with the resolution professional over the last 1 month is that both of these bids seem to be failing on technical grounds for some or the other reason. Therefore, the obvious second step would be to invite rebids before the 270-day deadline ends by the end of April. So all of the other players as well that had submitted expressions of interest, including Vedanta, Tata Steel, SAIL, Nippon Steel, will also be invited to submit their bids again. But this is the interesting part. Both Numetal and Arcelor Mittal will also be given a chance to submit their bids again. Now, one might question why these two players that were rejected in the first round should be entertained again. Well, this is what the bankers have to say. Numetal, if it comes without Revant Roya in the consortium, who remember is the son of Essar Steel promoter Ravi Roya, their bid, standalone bid, could still be considered for Essar Steel. And the second part of this is Arcelor Mittal, where the contention was its stake in Uttam Galva Steels and KSS Petron, both of which were defaulting companies. Now, Arcelor did exit both of these companies before submitting its bid on the 12th of Feb, but the bid was disqualified on technical grounds because sources indicate as of the 12th of February, SEBI records still showed Arcelor Mittal as a promoter of Uttam Galva. So in the second round of bidding, perhaps that is something that could be rectified now that the company has exited Uttam Galva completely, and therefore they're hopeful with all of these players coming together to bid again, there will be a very high bid placed, and it will be beneficial for the lenders at the end of the day.
All right, so we'll keep an eye out on that developing story. But remember, we told you first on the 6th of February, it's official now. Videocon is set to sell its 51% stake in the general insurance arm Liberty Videocon General Insurance. Videocon has informed the exchanges about this sale. Yash Jain spoke to Rupam Asthana, the CEO of the company. Listen in to what he had to say.
Videocon Industries Limited is exiting, and their 51% stake would actually get split between two Indian promoters. 26% of that would go to the DP Jindal Group, and 25% of that would go to Enam Securities Private Limited. So these are the two new promoters who are coming on board, along with Liberty Mutual, which is our foreign promoter at 49%. So between these three, which is Liberty Mutual at 49, Enam at 25, and DP Jindal at 26, is how the shareholding is going to be split from here on.
Okay, so that's the latest on Videocon and their divestment drive to try and generate some cash. Moving on, Efficiency Services, or EESL's arm, has acquired UK-based Adina Power Services. CNBC TV18's Utkarsh Chaturvedi caught up with Saurabh Kumar, the MD of the company, and began by asking him about the revenue contribution from this operation and what the company sees coming through from the acquisition, and of course their plans on debuting on the Lal Street.
In UK, we want to raise the revenues from their current 110 million to maybe about 200 million in a couple of years' time, as far as UK markets are concerned. In India, the near-term opportunity that we are looking at in the next 2 to 3 years is about 1,000 megawatt of installations.
Sir, speaking about an IPO, what is the plan there? Because we have done this acquisition just before we are planning of the IPO. Will this add to the portfolio? Is the IPO we were waiting for this for the IPO to come?
Yes, we were waiting for this to come, and also many of the new projects that we started in this current financial year, which is ending on 31st, whether it is the electric mobility part or the smart meter part, all of that is now going to give us revenues in the next financial year. We are looking at an IPO in the second half of the next financial year.
How much stake are we really looking to divest, and how much money are we really looking to raise from this?
Our paid-up capital by the middle of this year will be about 1,000 crores. We are looking to divest about 20% of it.
Just taking ahead on the e-mobility part, sir, has the first phase of the ESL order, have the vehicles started coming in, and by when can the first phase of the order can be done?
The first phase of the order is already implemented, executed. The vehicles are running in Delhi in various offices. We are aggregating demand from other places. We just signed an MOU with the government of Andhra Pradesh to provide them 10,000 vehicles over a one-year period. We are signing an MOU with government of Gujarat, hopefully next week, for 8,000 vehicles, and also next week with the government of Maharashtra for another 1,000 vehicles.
And the second tender of the same ESL was also supposed to come, sir. By when can that come?
It has already been issued last week, because now our aggregated demand is more than 10,000. So we have issued the RFP last week for the next 10,000 cars.
And in a landmark decision to boost job creation, the government has amended labour contract rules. This is to encourage contract jobs or fixed tenure jobs. Lata is here with more details. Lata, what does this mean?
Well, first let me say that I have not read the original contract rules and I'm going by news reports. And this has been a long-standing demand. It was even promised in the budget. And what it really means is that you don't have to always employ people for life. You can have fixed contract jobs. Originally, the labour rules didn't allow it because it was seen as a very capitalist demand. That people will be, the hire and fire will be resorted to unfairly. Just fire a person before he becomes eligible for PF or pension or maternity benefits. Now the rules say that you can actually in June of 2016 itself, the labour rules were amended to allow it for the apparel sector. And with the promise in the budget, now that word apparel has been removed from the amendment, so it is now applicable across the industries. The labour that's employees thus contracted will not obviously have notice period benefits, because if you take them for a week or 1 month or 2 months. However, there are some benefits, like if you contract them for 3 months, then they get 2 weeks notice period. So it looks like a graded benefit, but I have not read the fine print. It is an important demand that industry has placed, especially seasonal industries like, say, sugar or cement or construction. People still employed by getting across it. They would, like for instance, a company like Team Leads would be given an outsourced contract. So instead of outsourcing now, the companies can themselves contract the labour to the extent they need. It certainly will mean going up in the ease of doing business, but we have to read the fine print.
I'm wondering if that means it's a bit of a negative for the staffing firms, but I think that's a later discussion. We'll have to get into that.
There is an ideology involved. Don't wait. That's why it took so long. I mean, I'm sure the communist parties and labour unions will come heavily against it. But I mean, certainly it was allowed in the apparel industry, and we didn't see it being a political issue.
Okay, all right, Lata, thanks very much for that heads up. Let's now move on. The government's much-touted flagship infrastructure schemes are struggling. The reason? Paucity of funds. Now, who's saying this? This is according to a report compiled by the Parliamentary Standing Committee on Urban Development. The government's 6 top infrastructure initiatives spent just 21% of the total allocated funds of over 48,000 crore rupees. These flagship programs include Amrut, the Smart Cities program, Swachh Bharat, National Urban Livelihood Mission, and the Prime Minister Awas Yojana for housing. According to the report, the Urban Development Ministry was allocated less than 50% of the 8.6 lakh crore funding that they had asked for in the budget.
But for the Smart City mission, only 1.8% has been utilized from this 10,000 crore rupees that were allocated. Even for the Housing for All mission, the Urban Development Ministry hasn't used more than 20% of the funds that were allocated. As a result, only 25 lakh houses of the total 120 lakh have been completed so far or are under construction. The last one, the Swachh Bharat mission, also suffers from lack of spending, with the ministry only having spent 38% of the allocated funds, which is a little over 2,000 crore rupees. These numbers raise several questions around the much touted schemes, with the vital one being, has the government promised more than it can deliver? A special discussion coming up on India Business Hour.
All right, now let's move to all the action on Primary Street, and there's always plenty of action in the IPO market. This is the latest one. State-owned steel company Mishra Dhatu Nigam, or Midhani, has opened out its initial public offering for subscription. The government is aiming to raise about 438 crore rupees with this partial divestment. Nigel is here with more details. Nigel, first tell me if I got the name right or not, and then, of course, details about the company.
Hey, Surabhi, good morning. You know, talking about getting the name right, I'll leave that to you. I'll go with Midani itself because, you know, it's quite a long name, but that's the one that's going to be debuting today. As you said, yes, 4.87 crore shares is the stake that was on offer. It consists of around 26% of the government stake. The IPO price was fixed between 87 to around 90 rupees. And in fact, at that price, the derived market capitalization will be roughly around 1,650 crore rupees. Now, if you're looking at valuations, well, if you're looking at the trailing earnings, then the IPO price was at around 13 and a half times its trailing earnings. Why did they come to list in the market? Well, they're just looking to fulfill the listing obligation. And in fact, the government of India is looking to sell its 26% stake or thereabouts. But what does the company do? They're leading manufacturers in terms of specialized steel. They're also into super alloys. And more importantly, they're one of the sole producers of titanium alloys as well. Now, if you take a look at the revenue breakup, it's basically catering to defense as well as the space sector. So both of them, between that, nearly around 90% of their revenues do come in from them. And their order book, visibility of little less than 1 year at around 530 crores, 520 crores approximately as of Jan 2018. Defense and space, obviously, they constitute bulk of that order. Now, if you take a look at the manufacturing facilities, well, they have just one manufacturing facility, but they're also looking at setting up 2 facilities in the time to come. So some clarity on that is what the street is looking for. Over the last few years, in terms of revenue growth, it's been around 9 to around 10% in terms of CAGR. Margins have been fluctuating in that 20 to around 22, 23% range odd. But the first half of the year this year was impacted because they had just one facility that's functioning, and that did take a shutdown. So if you're trying to extrapolate the first half of the year's numbers, then that may not be the right way of looking at it, because first half was particularly weak because they had only one plant. Now going ahead, we'll have to see that they'll have 2 more plants that will come on stream. So they'll look to de-risk themselves to some extent. What are the risks involved here? Well, 5 clients, they constitute nearly around 65% of the total revenues. So that's a bit of a delay. They have just one facility that's functioning. So that's not very good news as well. You'll have to look at when they set up the other 2 units. And also, they come out with new products. So we'll have to see the acceptance of this product. So we'll watch out for this one in today's trading session. Back to you.
All right, Nigel, thanks a lot for that. With that, we'll take a short break, come back, we take a check on the cues to watch from the futures and option space.
So Japanese markets shut today. The ones that are trading in Asia are holding on to some green. It's all about what the US Federal Reserve is going to do. All eyes on Jerome Powell as he chairs his first FOMC meeting. The 2-day meet will end later tonight, and the market is expecting a 25 basis points rate hike. As always, here's CNBC's Steve Leesman with the highlights of the CNBC Fed survey.
Let's take a look at what the market is looking for. Our 40 respondents, 100% think there's going to be a rate hike announced tomorrow. 83%, maybe even more importantly, see that second hike coming at the next press conference in June. The median forecaster in our survey sees 3 hikes this year and 2 in 2019. That's not interesting. What is interesting is the next chart that shows you where the risks are. This is a distribution of our responses. So 21 see 3 rate hikes. You can see that here. But all the risk, everybody else who's not at 3, they're at more rate hikes. So a bunch, the second number, 18, are at 4. And you can see there's no risk seen over here. Nobody's betting on 0. Nobody's betting on 1. It's all 3, 4, or 5. You can see that, by the way, when you look at the outlook for the 10-year yield. That goes up. Over here, 285 is the current rate. It's really 290 today, but we didn't change the chart. 317, in other words, we're over 3% by the end of this year, and then 3.5% by 2019. And now another interesting development. Over the course of our surveys, time after time, they have raised their outlook for the S&P. This is the first time since July that for 2018, they've brought it down. Still not a bad outlook, 4% from the current level for this year, 8% by the end of 2019. I'll take that in the current environment. One concern, though, it's not even the Fed. The biggest concern is trade. It tops the list of threats to the expansion. And on trade, 63% say that the president's trade policies are negative for the U.S. economy. 81% say an exit from NAFTA is a bad idea. 75% are concerned about a trade war. And about half, which is a plurality here, say that these steel and aluminum tariffs will cost jobs. And we'll be waiting for that statement tomorrow and see how Jay Powell steers the market towards 3 or 4. I don't suspect, Wolf, it'll be 5.
All right, indeed, all eyes will be on the Fed meet, the outcome of the FOMC. But what does that do to the commodities and the currency space? Manisha Gupta, as always, joins us to give us that update. Good morning, Manisha. Crude and currency, those two things you're watching?
Oh, absolutely. And ahead of the U.S. Fed meeting, as you said, we have seen strength in U.S. dollar. It is trading at a multi-week and a multi-month highs versus many other currencies. So whether it is the Swiss franc or the euro, Australian dollar, Canadian dollar, all of them are trading at a multi-week highs. And in that sense, it could be putting some where we have seen, because the metal prices are trading on the weaker side. But the good or the big gainer of the day clearly has been the crude oil prices, trading at a 3-week highs, gained 2% overnight. There are tensions back between Iran and Saudi Arabia. You also are looking at a decline in U.S. Weekly inventories. And the markets also are looking at the fact that the demand estimates continue to be on the stronger side. So we are back at $67 per barrel when it comes to the Brent prices. So very strong gains coming in for that one. But as I said, there is no good news for the metals as a space, because whether it's copper or zinc, iron ore, steel, all of these metals have declined yet again. And today is the 9th straight day when you have seen a slide come in for them. A quick word on the sugar prices, though, because that is reacting to the report from the government where they have scrapped the export duty of 20% on raw and refined sugar, and that seems to have improved the sentiment. But this is just the first step, because exports at these current rates are not competitive, because the international sugar prices are trading at a 7-month lows as well. So clearly you could be expecting some more steps in that sector.
Okay. All right. Thanks, Manisha, very much for getting us all the commodity cues. Well, now it's time to talk about futures and options, and Mangalam's the resident expert. So, Mangalam, there's been some buying, at least in the cash market, but what's F&O data telling us for today?
F&O data will be slightly more positive than what we got over the last 2 trading sessions. Why do I say that? From a flows perspective, one, because at lower levels, we did see a lot of cash market buying from both FIIs and DIIs. I say a lot given the perspective that we are seeing right now for our markets. We're closer to that 10,000 mark. So, 1,000 crores worth money pumped in the cash market. In the futures space, index futures, there the FIs sold heavy, 1,500 crores worth selling in index futures. Is that a hedge, or is that third day consecutive heavy selling in the F&O space? Because on Friday, remember, 2,200 crores worth selling in index futures. Then in the previous trading session, we saw selling in index options on the negative side. And now there is another round of selling in index futures. And there were about 10,000 shorts added. So what does this do? Well, at lower level, if there is support, the short exposure, which has grown to 57%, may give a case for some bit of short covering. And that is where I see some bit of hope, primarily for the bulls, because the FIs, they sold about 1,200 crores in index options. And out there, what they did was they unwound some long puts, which means that they not too sure, or they've taken some profits off from the long puts that they've taken. At the same time, they've added some short puts. So they've written put contracts, they've unwound long puts, and they've written some calls. So we have to watch out for the 10,200 mark, given the sort of writing that we've seen on the 10,100 call. 10,000 becomes very important because it is the maximum open interest out there. We saw some bit of writing out there. So 10,000 is an important mark. And in terms of stocks, IFCI and Jindal Steel into the F&O ban. There is news piece on Jindal Steel as well. And out of the F&O ban is BEML. That one spiked in the last hour of trade.
Okay, so that's all the F&O action. As we are ready to sign out of Power Breakfast, we will, of course, leave you with the Bullseye picks. We have Bazaar Morning Call coming up next.